From now on, the note will be divided into two portions, with each section showcasing a different team member's latest research, current thoughts, or breaking news before we get into the drill. However, as you have undoubtedly witnessed, the markets are moving quite quickly both before and after the drill. The stock markets are undergoing a substantial correction. The recent week has seen a correction, with commodity prices declining and in certain cases collapsing, and bond yields dropping pretty sharply. The gap between the rates on high-yield bonds and treasury bonds is beginning to widen due to yield spreads. There are numerous indicators and methods in which the markets are being affected by this concern. I'd like to present our point of view as we do have one. If you've been paying attention, you've heard it here before, but for those who haven't, let me explain. Slowly, then all at once. Since the Fed began rising interest rates in 2022, there has been a rolling recession, which is what we have been discussing. Housing essentially entered a recession when the Fed began hiking interest rates. There was already a slump in commercial real estate, particularly in office real estate. Multifamily real estate appears to be a problem right now. Autos have been known to stall out. They have stalled out at mediocre or below normal expansion rates after sort of stabilizing. We are witnessing a decline in capital expenditures and a return to consumer confidence. If you look at sales, housing was starting to gather up steam and has since regressed once more. After a creeping recession, it appears that we are currently at the all-at-once stage. A lot of people are starting to realize, and we believe that maybe the notion that inflation is the issue has been misguided. As prices decline, this continuous recession will come to an end. Deflation or falling prices is the danger I've been stressing. It's evident from last night's Amazon report that customers desire and receive lower prices. Even in the case of automobiles, the customer is reacting to some of the reduced prices and is not yet collapsing. Nevertheless, declining prices pose a challenge for businesses. It indicates that their margins will contract. The all-at-once refers to signals of deflation. We received the jobs report today and the PMI, Purchasing Managers Index, this week. They are both recessionary. Thus, the notion that we're in a recession is starting to catch on. This was actually triggered by that S rule in the unemployment report, which is essentially the unemployment rate increasing by 50 basis points on a 3-month moving average basis compared to its low. As a result, many more people are now considering a recession. When we say all at once, we're not thinking of anything like 2008 or 2009. The rolling recession component of this scenario would actually contradict that. Therefore, we're not implying that at all. However, we believe that the current emphasis on pricing power will be important. It's important because, as you may recall, inflation was also at double digits in the early 1980s, when Fed Chairman Volcker was attempting to choke inflation out of the system with double-digit interest rates. Therefore, that was a significant buffer in case he made a mistake. Since our inflation rates are significantly lower now, the Fed really has less leeway. I do think that we are in some danger because of the higher-for-longer mentality and the belief that inflation is the main risk. However, I believe this cathartic moment is beneficial because understanding the problem is half the solution. These corrections are painful in the short term because there is a lot of misunderstanding. Many people have assumed that the world will operate in a certain way, but now it isn't. The notion that the carry trade, which, believe it or not, involves the yen, is winding down is one of the things you'll hear about more and more in the press, I suspect. Many investors and speculators borrowed yen, according to the carry, which is what people mean when they talk about the carry trade. They were therefore essentially short yen. Because interest rates in Japan were so low in comparison to the rest of the globe, they took out a loan in yen. They borrowed money there, then reinvested it in dollar-based assets or other currencies, but mostly the dollar, frequently in U.S. Treasury bonds, which were paying higher yields. The yen has been either constant or declining since 2011. Therefore, it was somewhat safe to wager on shorting or borrowing the yen because you weren't taking on a lot of risk. Actually, you benefited from a decline in the value of the yen in addition to receiving higher interest rates in the United States. Some believe that borrowing yen and then purchasing the Mag 6 or one of the broad-based benchmarks in the United States, such as the S&P 500 or the NASDAQ 100, which are both heavily weighted with the Mag 6, was a component of the carry trade. Again, there are some estimations as to how much of this actually occurred. A Deutsche Bank analysis claimed it might be a $20 trillion trade. Now think about that. Our GDP is around $25 trillion. So can you envision this carry trade, which was becoming a consensus trade, to the tune of $20 trillion? I don't know if that's true or not. To put it another way, I think the current value of the world's share markets is about $130 trillion. Therefore, $20 trillion is likewise a fairly significant market trade when compared to $130 trillion. The actual number is unknown to us. Given how sharply the yen is currently rising, it does make logical that this carry trade is ending. As a result, many who had staked their money on the yen's continued decline are now shifting their positions. Either they are reducing their losses or they are being forced to sell due to margin calls. Please let me know if there is anything else I should change. I mean, it's a wager for the future. I believe that Trump and Musk's friendship actually grows stronger. Because in my opinion, Musk needs Trump and Trump needs Musk. And we will continue to have these disputes, whether they are related to AI, China, or any of Doge's policies. I believe that this will continue to unfold as a soap drama involving Musk and Trump. However, that will really make it stronger. And for Musk, it remains his best wager on Trump to far. Alright, so this isn't the season finale, but merely a flare-up in an episode. That's right, this is only one episode of a Netflix series that consists of 10 to 12 parts. Palantir, the AI Messiah, is already on the dance floor from a use case standpoint. As I mentioned earlier, the bears are unable to perceive AI in the spreadsheets. As a senior living in Delray Beach at $83, you can tell that they detested Palantir just as much as they did as teenagers earlier this year. Salesforce, Palantir, and I believe MongoDB are just the beginning of what I consider to be the software age of AI. Which names that were very silent in 2024 do you think we'll be discussing next year? You see, 2024 was all about Tesla and NVDA. Which names do you anticipate for 2025? Yes, in my opinion, those still hold the top spot for large cap tech. I see a 25% increase in 2025. M&A, software, cybersecurity, hasn't been on the radar, in my opinion. Because now that Khan has left the FTC, tech is free of nightmares like asterisk Friday the 13th asterisk and asterisk nightmare on Elm Street asterisk. In my opinion, there will be a significant increase in mergers and acquisitions in the software and cybersecurity sectors. That, in my opinion, is truly what will drive this AI cycle. And in particular, I think that one of the IT fields that has the potential to be one of the largest outperformers in the future is cybersecurity. This week, I was joined by another tech analyst who made the same statement. Cybersecurity will be the main focus of 2025. I'd like to finish on Tesla. Elon Musk and Laura Loomer, a far-right activist who has been connected to President-elect Trump, were at odds overnight. And H-1B visas were at the center of the dispute. However, this person also asserts that Musk isn't MAGA despite his strong relationship with President-elect Trump. Do you genuinely believe that he runs the risk of losing the closeness to power that you described as one of the greatest opportunities in history? I mean, it's a wager for the future. I believe that Trump and Musk's friendship actually grows stronger. Because in my opinion, Musk needs Trump and Trump needs Musk. And we will continue to have these disputes, whether they are related to AI, China, or any of Doge's policies. I believe that this will continue to unfold as a soap drama involving Musk and Trump. However, that will really make it stronger. And for Musk, it remains his best wager on Trump to far. Alright, so this isn't the season finale, but merely a flare-up in an episode. That's right. This is only one episode of a Netflix series that consists of 10 to 12 parts. If you would like anything else changed, please let me know.